So I will just make a start, just in case we've got any more that are joining us, just by saying good afternoon now, and welcome to everyone for joining our second landlord webinar today. Just to introduce myself for those that don't know me, my name is d.clarke and I am the Lettings and Property Management Director at Nock Deighton, with over 30 years experience in the Shropshire and Worcestershire lettings market. I'm joined today by two experts in their specialist fields. First of all, Simon Fagan, who is a partner and corporate lawyer of Aticus Law Solicitors. Simon will be presenting a brief overview of the structure or restructure of property portfolios for the benefit of landlords and multi-property owners. And then I'm also joined by Matthew Hudson from Sureworks Electrical Contractors to go through the new electrical safety standards relating to all rented properties as of the 31st of March 2021. Matthew has 7 years experience in the lettings and property management industry as well, so he understands, he has an in-depth knowledge of what this means to landlords as well. So firstly, though I am not a solicitor, being members of Arla Property Mark, I do have the benefit of regular legal updates on current matters relating to the private rented sector. So I'm just going to, first of all, provide you with a brief update on some current and proposed new legislation. All those present at the live presentation today will have the opportunity to ask the speakers questions after they have done their presentation by entering these in the chat box, which should be visible at the bottom of your screens. I will read those questions out to each speaker at the end of their individual presentation, and we can carry these on at the end. So I'm hoping that the last one, I think we had 3 speakers altogether, including myself, and we're a little bit pushed for time, which is why we've got the 2 speakers today. So hopefully it'll give people a little bit more time to ask questions and for the speakers to answer questions. So we'll try and sort of keep to sort of 15-20 minutes each, but we've allowed an hour for this, so we can go over if necessary. So first of all, I'm going to share my screen with you. Just bear with me. So there we are. I'm hoping you can see my slides now. So my update here, I'm just going to, it's just a legal update, 4 subjects. First of all, evictions and current legislation that's been sort of changed recently, and just an update there. Then I've got a brief slide on the budget headlines. Then we'll just talk about pets in rented properties. And then finally, I'll just give you an overview on the debt respite scheme, which comes into effect in May this year, and just what the sort of headlines are there. So first of all, quick recap on tenancy notices. First of all, just up to the 25th of March last year, landlords were required to serve Section 21 notices. Everything was quite normal then to bring a tenancy to an end at the end of or beyond a fixed term, giving 2 months notice or 2 weeks notice for Section 8 rent arrears. Then came along the Coronavirus Act, where the notice period was extended to 3 months. And then on the 29th of August, it was extended to 6 months, except for antisocial behaviour cases, domestic abuse or major fraud, whereby 2 months notice is required by landlords. And then if it's 6 months rent arrears, then 4 weeks notice can be provided. And death of a tenant or failure of right to rent checks, then that can be 3 months notice. Then an update on tenancy evictions. First of all, no bailiff evictions, bailiff enforcements were allowed up to the 11th of January 2021. That date was then extended to the 21st of February, and now it's been extended again until the 31st of March. Obviously, this does nothing to help the 800,000 private renters who have built up rent arrears since lockdown measures started last year. This is on the grand scale over the UK, but what we're saying and what the advice is really is, if you can avoid the court process, then do try to do that for the time being. Obviously, we don't know what's going to happen at the end of this month, whether these extensions will be will sort of continue and new dates will be set. We have no knowledge of this at the moment, but it's always best to try and mediate, to try and negotiate with tenants just over this period to see what can be done as an alternative. So next we'll go into the budget headlines, and obviously I will just give the brief headlines that affect landlords. As we know, the stamp duty holiday has now been extended to the 30th of June this year for properties up to £500,000. A further extension to the 30th of September for properties up to 250,000, so it's scaling it down. This also relates to second homes, although people buying second homes, including buy-to-let properties, are still subject to paying the 3% stamp duty surcharge. From 1st of October 2021, the stamp duty will come back into effect for all properties over 125,000, although first-time buyers will still be given an allowance up to 300,000 purchase price. The government have also introduced in the budget a mortgage guarantee scheme, giving more lenders the ability to give up to 95% to help first-time buyers mainly. And then finally, corporation tax to be increased from 19% to 25% from April 2023. But with companies with profits under 50,000, that will remain at 19%. I won't go into any more detail here because obviously we have Simon going to talk to us a bit more about the corporate taxes, etc. And next, just a brief note on pets. Some landlords, or a lot of you may have seen in the media recently, things keep coming up saying that landlords should not discriminate against tenants with pets. I just wanted to make sure that we tell you that there are currently no rules to stop landlords and their agents from banning pets in properties. But also to say that according to the ALA update recently, countrywide, apparently there are only 8% of landlords do allow tenants with pets. And support for allowing pets does appear to be growing in the media. And the government have now produced a standard model assured short-hold tenancy agreement, although I do have to add that this is not mandatory, stating that pets, I think it has a clause in there which makes it more allowable for tenants to actually have a pet in a property without the consent of the landlord. However, the agreements that we have been provided with by Arla Property Mark include a clause which states that tenants should not keep any pets at the property without the prior written permission of the landlord, such permission not to be unreasonably withheld. That is the advice that we're given with the clause in the tenancy agreement. The reason for this is because obviously there's such a wide range of pets, you know, there's a difference between a Great Dane and a goldfish. So you can't just sort of say no pets at all, because that would be unfair terms. However, you can state that a landlord can refuse a tenant to have a pet, depending, you know, if it's a pet with sort of high levels of fur, because they have a pet allergy, but they may not be able to reasonably give permission, or sort of reasonably withhold permission for a tenant who has a cat with no fur at all, for instance. So that's why it's basically saying such permission not to be unreasonably withheld, because that should be withheld, sorry, because of the range of pets that there are. And so now I'll just do a brief overview. I've got about 3 slides on the debt respite scheme, also known as the breathing space scheme, which comes into effect on the 4th of May this year. I think that's Star Wars Day, isn't it? I remember. This affects not just the property industry, it relates to all qualifying debts, including rent arrears. It's actually being talked about or being planned over the last 4 or 5 years, so it doesn't really relate to the Coronavirus Act, it just happens to have come into effect this year as well. It's designed to give people a breathing space to allow them to assess and rearrange their financial situation and their debts, and gain professional advice on how to manage and pay their debts. And also to avoid and minimise the mental health crisis. As I said, it's not a result of the pandemic. So yes, it relates to, there are 2 parts to it. 1 is qualifying debts and 2 is mental health. So the procedure is that a person must visit a debt advice provider, which has been authorised by the Financial Conduct Authority, for example, the Citizens Advice Bureau. The debt advice provider will then assess their financial situation to qualify the debt. And then upon receipt of written confirmation from the debt advice provider, creditors, as in landlords in this case, or agents, must not pursue or approach the debtor for the amount owed, for example, rent arrears, for 60 days. So the breathing space is 60 days. With regards to rent arrears, tenants who have qualified for the scheme should still pay their rent within that 60-day period. So it will only relate to rent arrears up to the time that they actually apply for the breathing space under the scheme. What it states is that a landlord cannot serve a Section 8 notice, which is the notice relating to rent arrears, or commence court proceedings for possession within that 60-day period. So you can approach a tenant for anything unrelated to rent arrears within that 60-day period, but you cannot approach a tenant with regards to the rent arrears or pursue them for the rent arrears within that 60-day period. It also specifies that the person can only enter into the scheme once in a 12-month period. And basically that's it with regards to my slides here. I will just stop sharing and see if I think somebody has raised some questions here. Oh, muting others with background noise. I think Simon's muted. Matt, could you mute yourself? I'm not sure where that background noise was coming from. That's fine. Thank you for that. Yeah, that's all relating to muting. That's fine. So no other questions at the moment. I do apologise. Right, so one more question. No, that's fine. That's all with regards to the background noise. Well, I do hope that you heard a lot of that, but obviously I'll send the recording over to you as well. So now I'm going to hand you over to Simon, who's going to talk about setting up companies with regards to and how this sort of the advantages and disadvantages to landlords. So over to you, Simon.
Thank you very much. Well, good afternoon to everybody. My name's Simon. I'm a solicitor that's based in Manchester, but we cover across the country. Sales pitch over. Just, if you don't mind, first and foremost, just a very quick comment that's been raised in relation to the presentation you've just received, which is the issue associated with the applications that are being pursued before the court. One of the problems, regrettably, at this moment in time, which you ought to be aware of when it comes to issues over potential mediation, is how long courts are now going to be taking to get these sorts of applications listed, I'm afraid to say. And the situation is at this current moment in time, cases which would normally be 4 or 5 weeks are now taking 10 to 15 to actually get listed. And that's likely to continue for the foreseeable future, I'm afraid to say, because the courts are massively understaffed, but also, and particularly, unfortunately, they're underfunded. So they don't have the staff, they won't get the staff, they will just plod through at this moment in time. So bear that point in mind in respect of the comments you've heard there, please, in respect of trying to resolve wherever possible. Of course, there is the other added burden, which is solicitors' costs, which I'm sure you'd all rather avoid if possible, but never mind. Right, so I've got a screen to share, which I'm going to try and do now. So hopefully the situation with this will come up nice and clear for you. Right, 1 second. Right, so the situation from my point of view is that I'm looking at the situation with regards to business and restructuring. My job realistically is to take existing businesses and, where possible, to try and improve them, both in terms of issues associated with protection, but also in respect of the tax efficiencies that follow. So I think the first thing it's prudent to say from my point of view is that the role that I have is primarily the legal side. Everybody will have their own different financial circumstances, and there is not a single approach you can take right across the table, which applies to everybody and everything. But the crux of it is that in most instances, one of the principal considerations is trying to provide you as a landlord with as much protection as you possibly can. Now, one of the problems that we find from the experiences that we've had is that most people that own property and let them out are people that own second properties, third properties, and most of those properties are registered in individuals' names. Now, apart from the obvious comment, which to some extent is that may not be the most tax efficient situation, one of the biggest problems, and in particular one that's going to continue to grow in my opinion, is that there is a real risk that those landlords are going to be personally exposed in the event of a claim. Now, regrettably, we are taking over from where the Americans started in respect of having a very litigious nature. And the situation is, and you will have seen, that over the last couple of years, there's been surges in attacking and claims being pursued against all sorts of entities. And landlords, I'm afraid, are slap bang in the middle of that situation. And so the situation is that from my perspective, and the commentary that I'm trying to make in relation to this presentation, is if these properties are all owned in your own name, you're potentially exposed. And that realistically is something which you ought to look at an early stage. Now, it sounds very negative, it sounds very doom and gloom, and I'm sorry that's the case, but the reality is that's something which you have to take into account. And to some extent, the situation is, and going on to what regrettably is my next series of slides, is that there are other problems which I think regrettably are going to impact upon you and impact upon the income that you potentially receive. Now, I've tried to joke it through with a comment there, which is the tax man cometh, but the reality is he is. The situation is, you're probably already aware, the country is currently billions of pounds in debt, and they are going to be looking realistically to recoup what they can from where they can, and easy targets are things associated with property and death. If a property is owned in your own name, the situation is obviously it forms part and parcel of your estate. Regrettably, if you're not here anymore and time has come for you to pass, the situation is taxman is going to be looking to try and get what he possibly can from your estate, because realistically it's easy money. Now, that equally applies regrettably to things like capital gains tax, The stamp duty is likely to increase in due course, especially on second properties. And of course, then you have the standard tax as income tax. And of course, you've also recently seen from the budget just last week that corporation taxes are changes, albeit it's not as bad as I initially thought, in fairness. But the situation is that regrettably, a point that you must take into account when looking at your own portfolio is realistically whether or not you are exposed. So the position as it currently sits is that these are things which regrettably I think you have to take into consideration. And unfortunately, these things are going to happen in one guise or another over the next couple of years whilst the government tries to recoup what it can from where it can. So if the situation is you've got a property that's registered in your own name or multiple properties that in your own name, it might be the time to think about reorganising and restructuring that particular situation so as to minimise both your personal exposure but also your personal taxes, which potentially has obviously long-term benefits. So just following on to some extent, just again, food for consideration at this moment in time, because it's a point which has already been raised by Dawn, is that obviously the situation with regards to tenants over the past 12 months or so has been unusual, and they've been afforded an incredible amount of protection, bearing in mind the current circumstances. Now, I think, unfortunately, again, as already identified, that situation is likely to continue for a while. And the situation is, as I've referred to, as moratoriums, but the position is obviously, as you've heard, there's been extensions and extensions and extensions in respect of what you can and can't do in respect of tenants. Now, just to concern everybody generally, the position is that I think, again, this is just opinion as opposed to anything pragmatic, is what you're likely to find is that, bearing in mind the issue over the furlough scheme has been extended, that there's a very good prospect that issues over tenancy protections, and I use it for their benefit as opposed to our own, is likely to also be extended to some extent, mainly because of the fact I think the government have got to be very careful about how, in the due course, they basically allow the workforce to go back. They do not want a sudden surge of unemployment cases being hit at the same time. So I think there will be a gradual introduction or reintroduction of the workforce. And that basically means they'll want to try and avoid causing further problems. So I do fear, although it's not confirmed, of course, that the situation that's been provided now with regards to tenancy protections may well be extended a little bit longer. So these are concerns you have to take into account. And unfortunately, the situation is it goes further than just the bog standard tenancy protections. I've mentioned the position with regards to claims. You may be already aware that housing disrepair is quite a favourable one at this moment in time. Regrettably, again, I blame my own industry for this as opposed to anything else. Once upon a time, those sort of solicitors that were dealing with personal injury claims on a regular basis moved into the PPI market, and now they're looking at the next area. And I'm afraid housing disrepair is one of those which is getting more and more coverage within the solicitors industry. So painfully, again, the issue of protections and the risk that applies to the individuals, I'm afraid to say, is definitely one which you have to take into account and be conscious upon. So to summarise that situation up, the current position, if you own properties in your own name, you have obviously the issues of personal tax liabilities. There's the risk of landlords being sued personally. Unfortunately, when it comes to claims that are being brought against the landlord, regrettably, it doesn't necessarily limit it to one claim against one property. It can be far wider, and regrettably, therefore, all assets are potentially at risk. And so by consequence, and again, a rather flippant comment, but one which I'm afraid has an impact, is that if you've got multiple properties but one bad tenant, that bad egg can damage your whole portfolio if they've got the real claim to pursue against you. So those are the reasons why, generally speaking, and from my perspective, there are some concerns about personal ownership of property and assets in respect of landlords and their business. So are there alternatives? Well, yes, there are. And I've no doubt that from your perspective, you've given these plenty of consideration before as to what may be the best option. Now, the situation is realistically what I'm talking about is a change of the way in which you operate your business. Now, at first value, one of the things that puts most people off, and I'm going to come on to this in just a moment, is the fact that you've got this potential burden of cost now as opposed to some point into the future. But the reality is, and certainly to some extent, now is actually quite a good time to be entertaining this, primarily because of the fact that the next couple of years, as I've already said, I think you're going to find that there's going to be further and wider attacks upon private landlords, and also in relation to the claims that were brought against them. So in the circumstances, it's not a bad idea to be giving this sort of thing consideration at this moment in time. Now, by looking at the position in front of you, there are alternatives, like I say, and those alternatives realistically are summed up in the last line of this paragraph, which effectively is you're looking towards transferring what effectively your assets in the current form out of personal names and into some other structure. Now, there are clear legal distinctions between what are limited companies. LLPs are referred to as limited liability partnerships, but you can also have property owned in trusts. And that also depends on whether or not the business in which you're involved in is something purely personal to you, or is it basically a family business which is ongoing. Now, to some extent, in relation to which is the best option, a lot will depend realistically on the management structure you currently enjoy, but more in particular, the tax situation that you find yourself in, and also whether or not there is sufficient equity in your assets to justify looking at these sort of transfers. So the position is that, as I mentioned a moment ago, by taking it out of personal ownership, you're removing that immediate risk of personal liability. And that's a very important point at this moment in time. Now, the situation is, look at negative considerations very briefly. There is an upfront cost. Regrettably, that's something which you couldn't necessarily avoid. However, taking properties, for example, out of personal names and placing them into corporate structures does not automatically mean that you are liable for additional burdens of stamp duty and costs of that nature. The situation, generally speaking, and again, I do stress this is subject to tax advice, but the situation, generally speaking, is a wholly owned asset now going into an entity which is wholly owned by you in any event doesn't automatically attract such liabilities. So the situation is that whilst there are upfront costs, they're not as extensive perhaps as you may fear them to be. Moving on from that point, yes, there's an organisation element. It takes time to get these sort of things sorted out. It's not just an exercise of realistically just simply transferring a property over with a simple piece of paper. The position is often properties have benefits of mortgages, there are leases in place. Those all have to be changed over from the individual's names or your business name into a limited structure, whatever format you end up looking at. But the situation is those processes can be done, and in truth, albeit they do take a bit of time, can be done reasonably promptly in the current circumstances. Because the one thing which I'm pleased to say has definitely improved during the course of lockdown is the electronic means of getting things resolved, in particular with the land registry and also with the banks. So the reality is there's definitely a benefit in being able to push things through that format, whereas once upon a time it could potentially take months and months and months and months. So the situation is that from a perspective, when looking at your options, the position realistically is you've got to make a determination as to what the right structure is. And as I mentioned to you at the beginning, the situation is there are various forms in which you can look at in terms of developing your structure. That structure can be one which realistically is simplistic or can be complicated depending on the tax and financial structures that you want to entertain in the background. But once you've made that decision, then it's an exercise of applying your properties into that structure and reorganising your arrangements so that basically you can move forward with a certain degree of benefit and comfort. Now, will mortgage lenders consent is a question I've raised there, and the answer is once upon a time, generally not. They were always difficult. But the reality is now is that, again, they are looking at consenting and reasonably promptly as well. So the reality is as long as there's no change in their interest in the property and their financial protections, quite frankly, they don't really care. As long as the situation is that effectively they've got the benefit of the security. So these sort of things realistically, which were once problems, are now changing, and they're changing much to our benefit, in my opinion. The final point I put on that page is personal guarantees. Now, the situation is that what I've talked about all the way through so far is protecting yourself. And the situation is that personal guarantees basically come in at this stage. If you look towards transferring properties into limited companies, banks might require a personal guarantee from you as an individual. Now, that's not necessarily as frightening as you need to think it is, but the reality is what it does, it gives the bank that element of security. In truth, it doesn't really change the exposure you have to the bank before or after the transfer of structure. What it does, however, do is it takes you personally out of the firing line from your tenants and from claims that those tenants may bring. So the situation is the personal guarantees to which I'm referring to are those which your financer may look for from you in the circumstances. But again, that is dependent upon your assets, dependent upon the circumstances, and dependent on whether they want it or not. But it's definitely something which is a potential negative in the circumstances. However, here's the benefits. By putting it into a different structure, you change your position altogether. So you actually reduce the direct risk of personal liability, and that in itself is massively important. Now, You've then got additional benefits. Like I say, the tax situation is something which we can talk about in terms of giving a general advice, but your own accountants, tax advisors specifically, are far better to provide that sort of advice in the circumstances. But the reality is that whereas income that comes directly to you personally as a landlord is subject to your profit and loss and income tax, a profit that goes into a company does not automatically have to be withdrawn. It can be sat in, it can be utilised, it can be developed, it can be set off against losses. So the situation is you've got better control of your income coming in, and therefore you can minimise your potential, legitimate stress, minimise your potential tax exposure. So by consequence of that sort of approach, you can change and improve your position considerably when it comes to issues of and associated with your tax potential and your tax position. Now, the other thing which derives, of course, is if the properties come out of your personal name, the situation is, albeit you then have shares, and we'll talk about shares in just a moment, the position is that the immediate risk of inheritance tax falling upon properties in your portfolio is removed. And that's because of the fact that the property sits and is owned by your corporate structure, whatever that structure may well be. It's taken out of your estate, albeit you may still be the management behind it and the owner ultimately of the beneficial interest. But the crux of it is, as far as that matter is concerned, is again, it's a benefit because it takes away your immediate inheritance tax risk and liability. And that, unfortunately, is something which I think is going to be very important in the years to come. So, process-wise, like I said, the situation is there are various types of structures which are available. Some of you may already have companies, some of you may already have LLPs. The situation is that each situation, as I mentioned earlier, is different. Each situation does rely upon an assessment of your circumstances. It relies very heavily upon clarification of value. Sometimes, in some instances, it's simply financially not worth changing structure. But the general situation is that, from my experience, looking at the situation at the very beginning, and also, of course, determining what your long-term objectives are, and making sure that protection in a variety of ways is what you're after, or whether or not ultimately it is beneficial to remain as a personal owner of property. Those are things that have to be considered before you even start a process. So don't be in any way misunderstanding about the situation. This is not an exercise of turning around saying you must do it. Each circumstance is different. Each situation justifies a review. Each review concludes with a potential or not. It's not a foregone conclusion that it's beneficial. It will be assessed, and that's the very important feature. The point I'm making is that simply to say it is as it is and that's the end of it may unfortunately be the wrong thing for you. So there will be a risk and a cost analysis. That is something which will be investigated for your benefit. You'll be advised accordingly as to whether or not it is a good thing, a bad thing, or what those options may well be. And thereafter, if you decide that it's the appropriate thing to do for you and your assets, the position is we then proceed to secure the relevant consents and get all the documentation moved forward. Now, that will then lead to all the respective legal documentation, the transfers from personal into the new structure, and the registration of the same accordingly. If everything went smoothly, I would expect that this sort of process would take usually between 2 and 3 months from start through to finish. That takes into account the consents that you'd require from the mortgage companies, the processing and documentation exercise that needs to be considered, and the situation can be resolved, like I said to you before, mainly by electronic means nowadays. And so the situation, thankfully, is it's reasonably prompt and reasonably fast to get sorted. But that's the general situation. Now, the crux of it is, from my perspective, is that if you're owning properties in your own name, or if you're looking at acquiring new properties, certainly from our perspective and the experience that I've got and the advice I give to our existing clientele, is that basically you should always be looking at whether or not it is beneficial to look towards placing your assets into a corporate structure. Now, the reason for that is not just associated with issues over ownership, but also issues associated with your relationship with your tenants. Because in effect, a limited company, i.e. not you, becomes responsible for dealing directly with those tenants and deals effectively with any problems that they have. And subject to the structure you end up with, one of the options that's available to you effectively is having a management or service company that sits beneath the ownership of the businesses and the tenants. So effectively it deals with the tenants, it contracts with the tenants on your behalf, it enters into all the respective agreements. And the situation is then, if there is an issue or is a claim, there is an effective middle zone where you directly are not affected. and that basically can be very, very beneficial in due course. So that's basically the crux of my submission, and hopefully that makes some sense.
Right, well, thank you, Simon. That was really, really useful. I know I've certainly learned a lot from what you've said, because sometimes you ask people questions and you always get the answer, you know, it really does depend on your circumstances, but you've given a good overview there of you know, what the pros and cons are. And I think it makes it very, very clear to people that, you know, if you are thinking about sort of investing for the first time or adding to your portfolio, it's well worth doing that research to start with and getting that professional advice to start with, to just find out what is going to be best for you. Because obviously, like you say, sort of short and very much in the long term as well. I think it's very, very important to get that good advice.
Okay, well, great. Well, I've just seen 2 questions, so I'll just deal with those if I may.
Okay.
First one's coming from Tom, which is, wouldn't I have to pay capital gains on moving personally owned property into a limited company? Generally speaking, no. If I mentioned, as I mentioned before, it's effectively an asset which is owned by you, put into a company that's owned by you, but it would be subject to a review by your accountant or a financial advisor, just to be on the safe side. But generally speaking, that is the position that you are confronted with. You shouldn't have to pay capital gains tax on what effectively is a transfer in that capacity. So you should be fine there. And then the second question, which has been raised by James, is the likelihood of a claimant piercing the veil during an action if the company is taken to court. Very sensible question in the circumstances, but just to clarify, the situation behind a company is that a company is operated by its directors. And the position is that, generally speaking, the directors benefit from a corporate shield, which protects the directors from any personal liability. Now, the situation is, if a claim is then brought against the company, it is actually quite difficult to pierce the veil, as James is quite properly raising the point. And the situation is in certain circumstances, it can happen. But it is very rare, and it's also very hard to do, because the reality is it has to be able to show or satisfy that the director in question has acted outside of his fiduciary duties, his legal duties to the company. So he's done something which effectively he should not do in all the circumstances. So whilst it is a possibility that somebody could be held responsible for doing something to a tenant, for example, I'll give an easy example, lying to them would be an easy example, where if you're lying to your tenant, and the situation is that a tenant then turns around and starts making accusations that you've lied, that is the sort of thing that could pierce the corporate veil. But the situation is that, strictly speaking, the position is that as long as you are legitimate, as I have no doubt the vast majority of us are in all the circumstances, then the prospects of being able to pierce the corporate veil are very, very limited indeed.
Right, okay. And I've got this other question. Why is there no assistance for loss of income when refunding students?
I think that's you in fairness.
Yeah, I'm not, I couldn't really answer that question, actually. Yeah, that's just, I think that's the government making up their own sort of decisions on sort of income and anything like that. So I can't really answer that question, I'm sorry. Okay, so if there are no further questions, I think you got picked up, yeah, the one from James in the Q&A box. So that's fine. So thank you so much, Simon. You've given your details, but if anybody does need the details, you've got my details, you've got my email address. If you need to contact Simon directly to ask him any questions after this webinar. Yeah, but that was very useful. Thank you, Simon. Now I'm going to pass you over to Matt, who's going to give us an overview of the electrical regulations. So Matt, over to you.
Hi, thank you very much. Good afternoon, everyone. I'm just going to share my screen, just 1 second. Hopefully it works. Can everyone see that? Right, okay. As Dawn's mentioned, I'm just going to do a bit of brief about myself and background of the company. I've 7 years letting agent background with a company called Morris Marsh and Poole. I'm a current member of Marla Property Mark. I've previously been a customer of Sureworks, and I've come to join them now at the start of this month to join a growing portfolio of letting agents and customers and be training to do my quantity surveying course. Bit about Sureworks, we're full service electrical contractors based on the Shropshire and Powys border. We're NIC, AIC, CHAS and iOS accredited. We've supported Nock Deighton with electrical work since the 1st of July last year. We're qualified and competent electricians. I'm going to talk about the regulations coming into place from the 1st of April 2021. The electrical safety standards in the private rented sector, Regulation 2020, was effective from the 1st of June 2020. These regulations require landlords to have electrical installations in their property inspected and tested by a person who is qualified and competent at least every 5 years. The landlords have to provide a copy of the electrical safety report to the tenants and local authority if requested. As I just mentioned then, the regulations were effective from the 1st of June 2020. From new tenancies that came in on the 1st of July 2020, the landlord had to have an electrical installation condition report carried out and provided to the tenants. And from the 1st of April this year, that will apply to any existing tenancies. I hope everybody can see the slides there. Your obligations as a landlord, obligations are just to make sure that you have an electrical installation report carried out in the rented properties, and as I mentioned before, inspected and tested by a qualified and competent person. The landlord has to obtain a report from the person conducting the inspection and tests, which gives results and sets out a date for the next inspection and test. Yourselves as a landlord have to supply a copy of this report to any existing tenants within 28 days of the test and inspection. You also have to supply a copy to any new tenants before they occupy any new premises. If requested from a prospective tenant, again, with the existing tenants, you have 28 days to provide a copy of this report. If requested from the local authority for a copy of this report, you have 7 days to send them a copy. Also mentioned at the bottom there, if the EICR report shows that any remedial works or any further investigation work is necessary, complete the works within 28 days or any shorter period if specified as necessary in the report. So on the EICR, you'll note the investigator will show that the work needs to be carried out in a shorter period. EICR overview, so the electrical installation condition report overview. When we go out, engineers go out, we check for all the fixed electrical parts of the property, such as wiring, socket outlets, light fittings, and the consumer units. A fuse board that some of you may understand the name for that will be inspected. This will include permanently connected equipment such as showers and extractors. When our engineers are out, with the inspection, they're trying to look for any electrical installations that are overloaded, any potential electric shock risks and fire hazards, and any defective electrical work, as well as the lack of earthing and bonding, the two ways of preventing electrical shocks that are built into electrical installations. And just also to point out there as well that appliances are not covered in these regulations. And as best practice, we advise that any portable appliances are tested and a copy of the inspection is given to the tenants as best practice. And again, the bottom point there, if tenants have their own electrical appliances, they're responsible for making sure they're safe as well. Findings in the EICR. I just want to go back just with regards to the electrical installation report. Please be aware that electrical installation report is different to a minor inspection certificate and installation certificates. The report gives you two type of gradings, so you'll either be a satisfactory or unsatisfactory. And the 4 codes that you would see on a EICR report. The first one being a code 1, which is danger present, risk of injury. The electrical inspector may make any C1 hazard safe before leaving the property. C2 is potential dangerous. Further investigation, which is FI shown on the report. Further investigation is required, rate delay. All the top 3 of them would make the report unsatisfactory. The bottom one there is a code 3, which is improvement recommended. So this is just advisories that we pick up on the report, and potentially in the future these could become a C2 and then obviously making the report unsatisfactory. These are a couple of examples that we've got with regards to EICRs. As you can see on the left one there, this is a satisfactory report. This is where it'll show the obviously report whether it is a satisfactory or unsatisfactory. Again, on the right, that is an unsatisfactory report. On to the next slide. On that will be page 1 that you would find that whether it is unsatisfactory or satisfactory. Page 3 of the report would list the codings that the engineer has picked up. So on this page you can see a couple of examples. So for the first one, we've got an absence for an RCD for all circuits, which is a code 2. Broken sockets, which is a C1. Earth test reading on the lights too high, which is a further investigation. And bathroom light switch is not functioning properly, which is a C3. RCDs are safety devices that identify earth faults, and older fuse boards wouldn't detect this, so this is one of the common things we find on most of the reports that we have. Again, like I just mentioned previously, please be aware that electrical installation condition report is different to the certificates that you have. So these are just a couple of examples. So for example, if any remedial works are carried out at the property, the left one you can see is electrical installation certificate. So this would be, for example, an installation of a new consumer unit. And on the right, we have a minor electrical installation work certificate, which would be, for example, replacement of the bathroom light. Please be aware as well, I've got a note at the bottom there, that any remedial works are carried out, if they are carried out by a rated electrician, they will automatically be registered with building control and local authority. Unregistered electricians are able to do testing and issue reports, but sometimes they're not able to inform the local authority and building control. The slide just shows a few examples that we come across on our reports. The first one being no RCD protection. An RCD is designed to protect against the risks of electrocution and fire. The second one, lights in the bathroom is not a suitable IP rating, e.g. in zone 1, and you've got a diagram there. Final thing now is just ourselves as Sureworks is our EICR pricing. As you can see here, 1 or 2 bed property is £125 plus VAT. 3 bed property is £150 plus VAT, and 4 bedroom or above property, or there's more than 1 consumer unit, we charge £175 plus VAT. Okay, that's me done. Thank you very much, Phil.
Thank you very much, Matt. That was really useful, and giving a more sort of in-depth view. I've got some questions here. Does the requirement for a landlord to obtain an EICR apply to commercial property as well as to residential property? I think the answer to that is no, it doesn't relate to commercial property, does it?
No, it doesn't. No.
No. Okay. Can you confirm that a washing machine or a cooker or built-in microwave, so anything that's not sort of portable, provided by the landlord, does not need to undergo a PAP test, a portable appliance test?
Built in, was that, sorry, Dawn?
Yes, built in. So anything, I suppose, that's just wired into the wall and doesn't have a plug on it.
Right, so yes. It would have to have a PAT test nowadays.
Oh, it would.
Yes, yeah.
Right, okay. That's interesting, because I thought that if it was wired in, they didn't.
Oh, right, I could double check that for you by all means. I'll speak to our electrical advisor director when he is in, but I will find out that for definite for you.
Okay, and for the purposes of electrical safety test, I think it's a similar question. Do integrated kitchen appliances such as fridge, freezers and washing machines count as fixed installations or appliances? So yes, the answer to that is yes, isn't it? But
yes,
yeah, we will double check on that, because yes, because I think if it's got my understanding was that anything that's got a plug on it needs to be tested, but if it's wired into the wall, it doesn't.
Right, I'll double check that for you by all means. That's absolutely fine.
That's great, thank you. And the other thing I picked up on actually, Matt, was you mentioned that when you do remedial works that you automatically register what you've done with building control in the local authority.
Correct, yes.
Because I know in the regulations it does state that the landlord has a responsibility to provide that information to the local authority. So if you're doing it as the electrical contractor, does that sort of mean that the landlord doesn't need to do that?
Yes, it does. But I think that's in there is because, for example, if an unregistered electrician didn't obviously carry out the work and the test, they would have to inform, landlords would have to inform, obviously, the local authority.
Right, okay, that's fine. Right, okay, I think that's all of the questions there. Let me just double check in the chat box as well. James Clayton has said, I think it's a user accessible plug rather than just a plug. That's what I've advised a few years ago in Scotland.
Yes.
Yeah, so we will double check
that, yeah, by all means,
and confirm later, so that's fine. Okay. Right, I think that's all the questions answered now as well. So yeah, if any other questions, anyone wanting to go back to Simon at all, please do so now, or if not, again, you've all got my email address with the which was on the invitation, so please send any further questions to me and I'll make sure that we get them answered for you. And that just leaves me to say thank you very much to everyone for attending, and thank you to Matt and to Simon for your presentations today. I hope everybody has found it really useful. I think there was definitely some interesting stuff in there, so hopefully we'll do another webinar in 2 months' time. And we will send everybody who has registered today and who has attended a recording as well. So if I do note all the comments to start with, which I didn't see pop up about sort of the background noise, if necessary, and I need to re-record my bit at the beginning, I did this the last time, so I'm quite happy to do it again. So I'll double check it first. But thank you again to everybody for watching today.